Across America's wheat fields, a quiet crisis is unfolding. Once the world's breadbasket, the U.S. now faces canceled orders and rejected shipments. The issue isn't quality, American wheat remains top-notch, but economic and political forces have made it too expensive and risky for many buyers. International customers are turning to Canada, signaling a deeper, troubling trend. This isn't just a market blip, it's a global story, touching everything from trade policy to the price of bread. The assumption that the world will always want American wheat is being tested like never before. We'll explore the events that triggered this crisis, why Canada is now the favored supplier, and the long-term decline of U.S. wheat dominance. Most importantly, we'll hear from the American farmers caught in the crossfire, watching their livelihoods hang in the balance. The warning signs appeared in summer 2023 as the golden fields of wheat ripened under the sun. But beneath the surface, trouble was brewing for American farmers and exporters. U.S. wheat export cancellations suddenly outpaced new sales, sending shockwaves through the industry and raising alarm bells in boardrooms and on farms alike. For the first time in over a year, the U.S. sold less than zero wheat, a net reduction of 128,000 metric tons. Ships left ports empty, and contracts that once seemed certain were abruptly voided. China led the pullout, triggering a domino effect, as other buyers followed suit. The world's largest wheat importer had spoken, and the message was clear. American wheat was no longer the first choice. This wasn't a one-off, it marked the start of a persistent pattern of rejection. Each week brought more canceled orders, and the paperwork piled up. By 2025, trade disputes and retaliatory tariffs made U.S. wheat prohibitively expensive. Political tensions and economic uncertainty only deepened the crisis. Buyers walked away from contracts preferring cancellation fees over tariff-laden grain. The cost of doing business with the U.S. simply became too high to justify. The reliability of the U.S. as a trading partner was now in question. Once trusted relationships were strained and negotiations grew tense and uncertain, each canceled ton meant millions of lost loaves of bread and lost income for American farmers. Rural communities felt the sting as equipment sat idle and local businesses suffered. The cascade of rejected orders was a loud vote of no confidence from the global market. Buyers looked elsewhere, and the U.S. found itself increasingly isolated. Economic pressures made American wheat an untenable choice. Competitors like Canada and Australia stepped in, offering more stable prices and fewer trade barriers. The impact rippled from farms to exporters, damaging the U.S. agricultural sector's reputation. Years of hard-earned trust were eroded in a matter of months. This was more than a bad week, it was a turning point. The industry faced a future filled with uncertainty, and the path to recovery looked long and difficult. The world was moving on, forging new alliances and leaving American wheat behind in the wake of a global shift. Why are buyers turning away? One word: price. Trade wars have driven up costs. In 2025, new U.S. tariffs triggered harsh retaliation. China slapped a 49% tax on American wheat. That instantly made U.S. grain uncompetitive against Canadian, Australian, or Russian wheat. Other Asian markets wary of tariffs hesitated to buy American. The strong U.S. dollar compounded the problem, making American wheat even pricier for foreign buyers. A Japanese miller, for example, now pays more yen for U.S. wheat than for Canadian, even before tariffs. Meanwhile, Russia and the EU flooded the market with cheaper grain. Buyers had little reason to pay a premium for American wheat. The result? A perfect storm: tariffs, currency strength, and fierce competition. International customers simply said no. U.S. farmers, despite producing world-class wheat, were priced out of the market. The global pivot was swift and decisive. America's wheat was left behind. As buyers abandoned U.S. wheat, Canada stepped in. Canadian farmers grow high-quality wheat, nearly identical to prized U.S. varieties. With American grain tangled in tariffs, Canada became the go-to supplier, especially in Asia. China, once a top U.S. customer, quickly pivoted to Canadian wheat, avoiding steep tariffs. Canadian ports and grain elevators surged with new orders. While U.S. sales plummeted, Canadian exports soared. Even the U.S. now imports millions of tons of Canadian wheat each year. Canada's government avoided trade wars, building a reputation for reliability. As the U.S. created uncertainty, Canada offered stability. This shift isn't just temporary, it's reshaping long-term trade relationships. Buyers may not return to American suppliers even if prices recover. Canada's gain is America's loss. The North American wheat market has been transformed. The 2025 trade war marked a dramatic turning point for U.S. wheat, sending shockwaves through the heartland. For decades, American farmers had relied on global markets to sell their harvests, with wheat being a cornerstone of agricultural exports. In April, the White House imposed sweeping tariffs, aiming to protect American industries from foreign competition. The move was intended to boost domestic manufacturing and agriculture, but it quickly set off a chain reaction that few anticipated. China, the world's largest wheat importer, retaliated with a staggering 49% tax on U.S. wheat, slamming the door on a vital market almost overnight. This response was swift and decisive, leaving American exporters scrambling. Just a year earlier, in 2024, China had been the fourth largest buyer of U.S. wheat, importing almost $500 million worth. The loss of this market was a devastating blow to American farmers and exporters. The new tariffs made American wheat unaffordable overnight, pricing it out of reach for many international buyers and causing stockpiles to surge. Other Asian nations, fearing they might be next in line for tariffs or trade restrictions, grew wary of U.S. grain. Buyers began to look elsewhere, seeking more stable and affordable sources. Proposed penalties on shipping with Chinese-made vessels threatened to add even more costs, further complicating the already tense trade environment and making logistics a nightmare for exporters. Industry leaders warned these moves could slash U.S. wheat exports by over 60%. The ripple effects would be felt not just by farmers, but by entire rural communities dependent on agriculture. The combination of tariffs and shipping penalties created a tsunami of economic pressure, battering the industry from all sides and leaving little room for recovery. Farmers lost access to key markets and contracts evaporated. Shipments were left stranded at ports, and years of business relationships unraveled in a matter of weeks. The trade war didn't just hurt exports, it stranded American farmers, leaving them with unsold grain and mounting financial uncertainty. The damage was swift, severe, and far-reaching, affecting not only the wheat industry but the broader agricultural economy. In the end, U.S. wheat was left out in the cold, an enduring symbol of how trade wars can devastate even the most established industries. Tariffs weren't the only problem. A strong U.S. dollar made things worse. When the dollar is strong, American goods cost more abroad. For wheat buyers, even a small price difference matters. As the U.S. dollar stayed high, foreign buyers turned to cheaper sources. Russia and the European Union, now the world's top wheat exporters, offered massive harvests at low prices. Buyers weren't making a political statement, they were making a business decision. The global wheat market is more competitive than ever. American farmers, once dominant, now face rivals on every continent. The combination of tariffs, a strong dollar, and aggressive competition was overwhelming. U.S. wheat became too expensive, too risky, and too easy to replace. Orders dried up and market share vanished. The crisis deepened in America's heartland. The world had moved on. This crisis didn't come out of nowhere. It's the latest chapter in a long decline. For generations, wheat was a symbol of American abundance and agricultural might, feeding not just the nation but much of the world. But the story of U.S. wheat is now one of slow erosion, shaped by global competition, shifting markets, and changing tastes at home. For decades, the U.S. was the world's top wheat exporter. American wheat filled ships bound for distant continents, and U.S. farmers were celebrated as the backbone of the global breadbasket. But since 2000, America's share of global wheat trade has shrunk from 25% to just 11%. This dramatic drop reflects not just lost market share but a fundamental shift in the world's agricultural landscape. The rise of Russia and the EU as agricultural powerhouses changed the game. These regions invested heavily in modern farming technology and infrastructure, allowing them to produce wheat more efficiently and at lower costs. U.S. farmers have also planted less wheat, shifting to more profitable crops like corn and soybeans. These alternatives offer better returns and are less risky in today's volatile markets. Since 1981, wheat acreage in the U.S. has dropped by 42 million acres. Fields that once grew amber waves of grain now lie fallow or are planted with other crops. Even domestic demand has fallen as Americans eat less flour than a generation ago. Changing diets, health trends, and the popularity of low-carb lifestyles have all played a role. The industry was already facing structural challenges before tariffs and trade wars hit. Outdated infrastructure and rising costs made it harder for U.S. wheat to compete globally. The recent crisis is a harsh spotlight on a legacy that's been fading for years. For many rural communities, the decline of wheat has meant lost jobs and uncertain futures. America's wheat dominance is no longer guaranteed. The U.S. must now compete in a crowded field where innovation and adaptation are more important than ever. The world's breadbasket is now just one of many players. Countries across the globe are stepping up, and the competition is fierce. The decline is real and accelerating. For the U.S., the challenge is clear: adapt, innovate, or risk being left behind in the global wheat market. Behind the headlines, American farm families are bearing the brunt of this crisis. For them, it's not just economics, it's survival. Half of U.S. wheat is exported, so closed markets mean a domestic glut and falling prices. Farmers face high costs for fuel, fertilizer, and seed, but get paid less for their crop. Many operate on thin margins and heavy debt. A prolonged downturn could mean bankruptcy. The ripple effect hits entire rural communities. Farmers feel powerless, caught in a trade war they didn't start. The future is uncertain. Should they plant wheat again, or switch crops and hope for better days? America's wheat crisis isn't just about farmers. It affects the entire global food system. When a major supplier is sidelined, it reshuffles supply chains and impacts food security worldwide. Importing nations must diversify, but over-reliance on any one supplier is risky. This crisis is a wake-up call for resilient, flexible food supply chains. For the U.S., it's a loss of influence and soft power built over decades. Rebuilding trust with global buyers will be a long, difficult process. America's role in the world food market may be permanently diminished. Stable trade and open markets are essential for global food security. The wheat grown in America or Canada ends up in bread and noodles worldwide. Disruptions, whether from tariffs, weather, or war, can lead to price spikes and shortages. In our interconnected world, a trade dispute in Washington can affect dinner tables from Manila to Cairo.